Hey there, thanks for tuning in. Welcome to Investing in Germany. And today it's time for the weekly market update. So, the most important thing that I need to discuss today is the Berkshire Hathaway Annual Report 2022. So, this is a really typical Warren Buffett Berkshire Hathaway document. There is no color, there's no selling, there's nothing. It's just basic investment, basic philosophy. So, what I really want to focus here is the amount of capital gain that Berkshire Hathaway has performed compared to the S&P 500 index. So, between 1965 and 2022, they have got a compounded annual growth rate of about 19.8%. If you compare that to the S&P 500, including the dividends, it's only 9.9%. So Berkshire Hathaway has doubled the amount of capital gain compared to the S&P 500. So this is really crazy because all over the world, people say that it's really difficult for anyone to beat the index. And here we can see Berkshire Hathaway almost doubling the index performance. So this is really crazy. And it shows the power of value investment, the philosophy of what the Charlie Munger or Warren Buffett, they're really trying to preach into the market. So the speculations, the short-term investments is all about nothing. It's all about long-term investment, value investment, and finding those really quality businesses and sticking to it for a very long period of time. If you have time for this week, I would really recommend you to read through this document. It just gives you a lot of details. It's a very simple English, simple financial metrics. Everything is so simple, down to earth. And it's a really great read and really understand a lot of about investing career. And trust me, this is not a time loss. It's a really time that you can really have in your life. And going to the market, the S&P 500 was not doing much well this week. This week is down by 2.09%. And if you also look at the last 3 weeks from 4th of February to this week, the market is down by 5.02%. That's a really not so good performance by the S&P 500. So one of the main reasons here is because of the inflation, interest rate, and the stickiness of the inflation that the economy is seeing in America. Let's go into the data which is creating the downturn in the S&P 500 for this week. So we had the PCE index which came in this week. So PCE index is nothing but the consumer spending in the goods and services in the America by the people of America. So if they're going to spend more, then index goes up. If they're going to spend less, the index is going to come down. The goal of the Fed is to bring this down because they want to reduce the consumption, reduce the demand, reduce inflation rate, bring the inflation rate back to 2%. But what's here happening in America is completely opposite what the Fed is really trying to achieve here. If you see in January 2023, they have spent quite a lot in America. Even if you remove the food and energy, which is really volatile because of the ongoing war and all the other stuffs, you can see that even the core is also going up, which means that people are really spending a lot, which means that they are creating demand and increasing the inflation rate. So this is exactly not so good for us, right? If you also look at the inflation adjusted spending, what's happening in America, it has really gone up significantly in January 2023. It was in December. You can argue that December was a month of holiday. People want to celebrate with the family and they want to spend some gifts and so on. So there is some reason behind for increasing spending in December 2022. But then not in January 2023. This is extremely very difficult to explain why this is happening. But the economists are thinking that this inflation is really sticky. It has entrenched into the economy and people are expecting that the inflation is going to stay there for a period of time and they don't want to stop spending and they want to live their own life and start having the same lifestyle they had before the interest rates and the inflation was really high. So this is not something that the Fed or the central banks would like to see. So for this matter, the market is expecting that the Fed might keep increasing the interest rate. They're not going to stop this time, or maybe they have another 0.5% or something like that. So market is really unhappy to see this people spending, and therefore the market is coming down. So we have to really wait and watch how it progresses. As the big economists say, if the America, they sneeze, the whole world catches the cold. And this is really important for almost every other country around the world to see how this is really going on. And the whole world wants the America to spend less and bring down the inflation. Let's wait and watch how it really progresses here. This is something that is not really good news from the economist perspective. And then coming to the other side of the Atlantic, we have the Bundesbank from Germany. The experts are predicting that the first quarter of 2023, we will have a negative growth, which means that technically we are at the moment in recession, because last quarter and end of 2022, we had a degrowth by 0.4% here, right? So last quarter 0.4 percentage down, and if this quarter is also going to contract, which means that we are technically into recession. Of course, there are quite a lot of different variants of definition of recession around the world, but let's stick to the basics. What the Investopedia says, it says there's 2 consecutive quarters of negative GDP growth. So last quarter we had a negative growth, and this quarter they are predicting to have a negative growth, which means that we are in recession. So this is clear for me. So let's wait and watch how the quarter one of 2023 is going to be there. Probably we will get the data in April or May. So we will know whether we were in recession or not. So this is really going to be a difficult situation for Mr. Scholz, who went on around the world saying that the Germany will dodge a recession. So if the recession happens, then it's not a really good news for the political perspective, because nobody in the world would like to say that or their economy is in recession, because recession is nowadays a very bad term to be in, because everybody wants the growth, everybody wants to have the high GDP growth, high growth per capita, and so on. So nobody wants to degrowth. And let's see how it really progresses. The layoff continues in the Europe, and we have BASF slashing 2,600 jobs in Europe, out of which 65% is in Germany. So indirectly, there will be another 500 to 600 jobs cut. This is not a really good news. So one of the main reasons here BASF is pointing is due to the energy cost, because before a couple of years back, we had the cheap gas coming in from the Nord Stream, from the Russia, and all the chemical industries which are really energy intensive, happy to have the cheap Russian gas, and everything was good and they were really competitive in the international market. And now there is no gas coming in from Russia, the pipes are dried and the gases are coming over the sea, and the transportation cost will make sure that we will not reach to the gas price of what Russia was offering the Europe. So this is one of the reasons why BASF is cutting the job, and they are moving their production outside of the Europe where the energy price is low, which is nothing but in America. We have also several other chemical companies like Bayer or also Henkel, so which are also very energy intensive businesses. So we have to wait and watch how they are going to proceed. I think if one company starts this, the other companies will follow it. It's given. So it's not a really good sign to be in the chemical industry in Europe, or for that matter also in Germany. And we have Meta AI coming in and saying that, come on guys, it's not only Microsoft and Apple who are into AI, it's also Meta or the Facebook. We are also into AI. So please also consider us and invest your capital into our company. So this is something that is happening here from Meta. So let's wait and watch how it's really going to materialize for Meta. And Meta also this week, they launched the Meta Verified, just like Twitter, where they are paying about $12 or something like $10 and $12 depending on where you buy the verification blue check. So it's a additional free cash flow for the Meta with a very, very low investment. So I think it's a really good news. I'm invested in Meta, so my feedback would be much more biased. But I think this is a really good news what I'm seeing here. And Meta is also relatively attractively valued compared to the other businesses around the world. And then we also have Apple coming towards the glucose tracking, continuous glucose tracking through the Apple iWatch or the watch. So it's a really good to see that Apple is really progressing well deep into the healthcare industry. So recently I see that Apple is investing a lot with the personal consumption healthcare. Like recently they launched the ECG analyzer, now with the glucose tracking. So they are really going into the healthcare industry where the margin is really, really attractive compared to other businesses. Of course, Apple already has a really good margin expansion and margin data metrics, but then this will also really add into their margin expansion. So it's good to see here. Let's see how it really brings in for Apple. And finally, I also want to touch upon the Chinese businesses, which is quite interesting at the moment, because this week we had a report coming in from China where the Chinese government had recommended the public sector units of the Chinese government to stop involving the audit companies from the America like E&Y or the PwC and so on. So they are clearly going in the wrong direction at the moment. As you can see here also, it's also seen in the market. So in 1 week, the market is down by 8.25%. And then you can also see in 1 month, it's down by 20.03%. So what I'm sharing here is the Crane shares, which is one of the biggest ETF for the Chinese economy. If it goes down, which means that almost all the stocks in Chinese economy is going down. So this is also not good news here. And we also had Alibaba reporting a really fairly decent number this week. But the market was not really happy to see it because they are really concerned about what's happening from the Chinese government policy standpoint. Because a couple of months back, the Chinese government, they opened up the books for the American auditors to come and have a look. And now they're going in the wrong direction. So this is why the market is really jittery at the moment and people are flying away from the Chinese stocks. So that's it for today. Thanks for watching. See you in the next video.